Hi, I'm Ryan Ward. I'm the broker and the owner of Premier Atlanta Real Estate, and today I want to talk just a little bit about what's happening in the real estate market. We just did a class on lead conversion and how to win in multiple offer scenarios with buyers, and after the class, some of the agents were talking about some of the reluctance that we are seeing from some buyers in the market. So I wanted to address this both from the agent perspective and then also maybe try to address this directly to a buyer. So whether you're an agent or a buyer, I'm hoping that I can put together in this one video something that will be helpful for both of you. So I think the first thing that we have to know here going into this is that, of course, this is a very strong seller's market in the metro Atlanta area. We have about a 1-month supply of homes. Typically, in a balanced market, we would be looking at somewhere between 4, 5, and 6 months of inventory. So we have literally 1/4 the inventory that we should have for a balanced market. This means that prices are going to be going up. It's simply a matter of supply and demand, and until that changes, prices are going to continue to rise. So if you're a buyer right now and you feel like you're reluctant to get in the market because there's a crash coming, or you don't want to get into a bidding war with other buyers for the same house where there's multiple offers, I want to kind of look at the scenario by which you decide to get out of the real estate market and wait and then buy a home at a later time. So if you're an agent, I want you to be able to have this conversation properly with your client. So maybe it goes something like this. My buyer's name is John, and we've put a couple of offers in on houses. Each one of those houses that we put an offer in on had other offers on it, and other buyers were willing to pay more for the house. So he's lost a couple of houses. He's not feeling very good about the situation, and he comes to me and he says, you know, I think I would just rather wait until the market settles down. So when I look at John and he tells me that, I need some more information. What exactly do you mean by the market settling down? Are you looking for, do you think prices are going to drop? Do you think that it's just going to balance out and in sometime in the future you'll be able to jump back into the market and buy a house? So, and then what's going to happen as the economy continues to get better and we see more and more people get vaccinated, more and more people go back to work, and we see interest rates rise. So I'd like to address a couple of the different aspects of this. If you're, I've got a little slideshow on my computer here that's got a little bit of information for me. So let's take a look at a scenario by which you decide to get out of the market because you're going to wait, and when you jump back into the market, the economy's better and interest rates have risen. So let's say you're looking for a home and that home had a $400,000 loan on it. So in current numbers today, at about a 3% interest rate, the principal and interest is $1,686. Now, if you decide to wait, right, you're not going to buy a house now, you're going to wait and buy that same house, I don't know, at this time next year. So you're going to continue to rent for an entire year and then decide to buy a house. Let's say interest rates are 1 percentage point higher. Okay, so at that scenario, instead of paying $1,686, you're going to pay $1,909. Or let's say that's what you qualified for, is a $1,686 payment. Well, if interest rates go up 1%, instead of qualifying for a loan at $400,000, now you're only going to qualify for a loan for $353,000. So a couple of different things can happen. In the event that the market does go down and prices do fall, now I've already computed that out, right? So let's say prices fell, that would be about a 12% drop in prices. Now, that's a huge drop in prices. If we were to, it's kind of outside of any expectation, first of all, that prices are going to drop. But if they did drop to some degree because the forbearance leads to a number of foreclosures and, you know, some additional inventory hits the market and prices drop, it would be very hard to imagine a scenario by which they would drop 12%. Okay, so that's one side of the equation. If waiting you're going to afford a smaller house. Now, the other side of it is if prices continue to rise, right? Let's say they continue to rise, but at a slower rate than we've seen for the past 6 months, and they rise, I don't know, 5% more over the next 12 months when you decide to get back into the market. It's more balanced. Not every house is selling for $25,000 or $30,000 over the list price. And that $400,000 loan you were getting now that home continued to appreciate. So now you've got to pay $420,000 for that same property. In addition, you've also been renting for the past year. So instead of paying your principal down by something like $1,000 per month, reducing your overall debt on the house by $12,000 over the course of the year, now you're going to have to pay $20,000 more for the house, and you've lost $12,000 more in equity. And so you've really lost $32,000 in that scenario. Okay, so that's one aspect of this that we have to look at. Now, if you're an agent, it's really important that you be able to figure out on the fly how to do these numbers very quickly. Now, our website has a mortgage calculator on it, but you could go to bankrate.com and you can do this on a piece of scratch paper, and I'll show you how to do that over here in just a second. So in my scenario here, we're talking about a $400,000 loan now. You can see this, I've got it pulled up on my screen here. So what you see is a house or a loan that was $400,000 at 3% now. You punch those numbers into the calculator, you see that it's $1,686. Hypothetically, if rates go up 1%, you can see that it's $1,909 for the same payment. Now, you also would like to know what that same payment will buy at 4%. So you can look at it and figure out that instead of being able to have a $400,000 loan, you have a $353,000 loan. But this is all kind of on the side. I think you have to have a conversation about why you're buying a house right now and how long you think that you plan to be in that house. If you're an agent, these are questions that you really need to ask. I mean, we cannot predict the future. No buyer can predict the future. We cannot predict when the peak of the market is going to happen. Nobody's smart enough to do that. The only time we'll know that is after the peak, prices have come down or leveled off or whatever is going to happen in the future. So at no point in time is it ever going to be possible to look at data and say this is when the market is going to peak, and so you should either buy now or you should wait until it goes down. That's just not how it works. So the conversation has to go around why somebody wants to buy a house. I mean, if you're relocating to Atlanta and you've got to be here and you've just taken, you've just got a promotion and you're now a VP of something in Atlanta and you think you're going to be here for 4, 5, 6, 7 years or more, I mean, there are very, very few times in the course of history that prices in real estate haven't gone up over an extended period of time. Now, if you're going to be looking at a house to live in for the next 18 months, well, that's a little bit of a different story. Maybe you're only here temporarily, and maybe for a scenario like that, renting might be a better option if you're somebody who tends to be a bit more risk averse. But these are questions that you can get with your real estate agent and answer, or if you are a real estate agent, you better be asking these questions of your buyer, because certainly nobody expects prices to continue to rise at the rate that they are currently rising. However, there are no economic indicators that suggest prices are going to fall. There are a number of economic indicators from Fannie Mae and Freddie Mac, from the Mortgage Bankers Association, and I will try to put together a few of those statistics, or at least links at the bottom of this video for you to review for yourself, that suggest that prices will ultimately level out. We'll have a few more homes come onto the market that are foreclosures or people who have to sell because they were in forbearance, and more people will feel comfortable having people into their homes, and therefore the regular supply of homes will also increase some. But you have to understand where we're coming from, and where we are right now is such a place of low inventory that we can absorb all of the foreclosures and all of the additional normal inventory. And we'll be lucky if that even brings us out of a very hyper seller's market into more of a normalized market. So this video isn't going to convince everybody that they should do everything that they can to buy a house right now, but it should at least open your eyes to the idea that the likelihood of a crash in real estate is very low. It's always going to be about supply and demand, and with supply as low as it is today, it's very hard to imagine any scenario by which prices will drop. If you wait, you're going to pay more for the same house at a later time in the future, and or pay a higher interest rate. And if it's both, the house that you want today may no longer be affordable for you, or the house that you're comfortable spending money on may not be nearly as nice as the one that you could buy today. So you have to decide as the buyer, and an agent, you must help your buyer decide what's most important to them. Are they willing to get in the market? Are the reasons that they have for buying a home today valid? If you're an investor, it's a whole different scenario. But if you've just had a baby, or you've just had somebody come home from college that's going to be living with you for a number of years and you need a bigger house, there are lots of valid reasons to go into a market today and pay $20,000 over what it's listed for. Lots of other people are doing it, but it is up to you to decide. It's not up to me as your real estate agent to figure that out for you. I can help by asking important questions for you and, walking through a scenario. If you decide to buy a house today, this is what it's going to look like next year, versus if you decide not to buy a house today and stay renting for another year, and this is what that's going to look like. So I can help bring some clarity to you so that you can make a better decision. That's my job as a real estate agent. And if you're a buyer out there and you're looking for some additional help, reach out to me. Reach out. I will put you in touch with one of our agents who will walk you through all of the different scenarios. There's no such thing as a bidding war, for example. I think a lot of times buyers are reluctant to buy a house that has multiple offers because they think of it as a bidding war. Well, that's not necessarily the right way to look at even a situation like that. So I'm hoping that this video will at least give you a little bit of a broader understanding of the complexities involved with making a decision around buying a house or waiting right now. There's no such thing as a right decision for all people. If you're risk averse, or if you don't have a large down payment, it's going to be very difficult for you to find a home in today's market. So we would have to use some techniques to try to make you more competitive. We can do that, but it's very frustrating for a lot of buyers today. I can see why many people have decided to wait, because they feel like they're just being outclassed by cash offers or people who have larger down payments. But like I said earlier in this video, there are techniques that we can use to find the right house for you and get you to be the winning offerer on that property. So if this video has got you reinterested in getting back into the real estate market, again, just reach out to us. We'll be happy to find the right agent, get you in touch with somebody, and get you set up and back out into the real estate market. If you're an agent and you'd like some more specific information on how you can compute what a principal and interest payment is going to be on a property at one interest rate versus another, it's very simple. Go to bankrate.com. There's a mortgage calculator in the buyer section on our premieratlantarealestate.com website. And just play around with the numbers a little bit and see what a 1% interest rate change does for a mortgage payment, or conversely, how much lower of a loan amount you can have. Make sure that you're advising your clients on the consequences of waiting versus buying now, and the cost associated with living in their current situation and for some extended period of time, as opposed to purchasing a house now. Now, if somebody is buying up or buying down, I think it's important to also help them understand how much equity they may have in their current home and how they can use that properly moving forward. You could talk to a well-versed lender, and they can help them as well in a situation like that. But there's no reason to just throw the baby out with the bathwater and say, I'm just not going to be in the real estate market anymore. Anyway, I hope this video has helped. Thanks for watching and have a great day.